Hello world, you're watching Exponential Tech. This is the place to be if you're into technologies that have exponential impact on your daily life, your wallet, and the world. Exponential Tech covers AI, crypto, as well as investing. Today, I want to talk about Tesla, the autonomous electric vehicle company based in the USA. I also want to talk about two crypto related articles, one on Ethereum dapps and another about a secret meeting between major crypto players and conventional financial market leaders. So on to the first topic, Tesla. Tesla is a company I've been following since it IPO'd. I personally don't hold any Tesla shares, but saying that, I'm not saying that I'm not in love with the company, because that would be an absolute lie. I'll go one step further and say Elon Musk is an absolute hero of mine. But what's going on with Tesla shares at the moment? Looking at the charts, you can see it's rather bearish, and it's been this way since about May 2016. So that's just over a year, actually. Sorry, I beg your pardon, May 2017, rather. In short, the shorts are winning the battle. Many investors are getting tired of waiting around for Model 3s. They're also tired of these hyped up promises from Elon. Though they did well in terms of hitting their 5,000 Model 3 production targets last quarter, they had to do this by erecting a tent in their plant car park. This is not really what conventional automotive manufacturers tend to do. But then again, Tesla isn't a conventional automotive manufacturer, is it? I personally don't see a problem with this. Tesla aren't doing something simple and easy. This is hard stuff. They are literally changing the world and tackling the hardest problems on Earth. However, the likes of institutional investors, such as the famous short Jim Chanos from Kinnikos, are not happy about this. They are highly, highly skeptical. In short, the stock took a battering this week after it was also revealed that Tesla asked suppliers to return money it paid to them as long ago as 2016 to help turn a profit on the books. This article goes into a lot of detail, and I've been wanting to talk about this but this week, but there were other really important articles and events that occurred this week that took precedence. But now that I'm here and talking about this, the article does say that haggling between suppliers and car manufacturers is not uncommon, with both fiercely trying to secure the best deal. But asking suppliers for reimbursements from several years ago is highly unusual in the industry and raises questions over the state of the business's finance. Elon has also said that Tesla, that is, won't need to raise fresh capital to fund operations and future plant expansions, such as the one that's been announced to occur in China. However, the market is obviously skeptical given this headline, and this is reflected in the price trajectory shown in the charts earlier. You know, Tesla is spending $1 billion a quarter to increase Model 3 production rates. So this is, the market is right to be skeptical. But is this dodgy or just Elon being a savvy businessman? I firmly believe it's the latter. Elon Musk is all about pushing the boundaries. And this applies to business just as it applies to technology. After all, he is what I call a mega entrepreneur. I actually think he will overtake Jeff Bezos of Amazon in terms of net worth. When this happens remains to be unknown to me, but at the rate at which Elon is working and the dreams and his execution, I think this will occur. And I'll leave that at that. Right now, let's go on to the article on Ethereum dapps. So, this article describes current sentiment towards dapps on Ethereum, on the Ethereum network specifically, after DappCon, which is a conference that was held in Berlin. This article indicates that the Ethereum developer community are invigorated and highly motivated to start building dapps that have revolutionary use cases and that will empower millions of people. Developers were not thrilled last year, as Ethereum was generally known as the ICO platform. In fact, it says in the article somewhere here, let me have a look at it, look for it, 78% of ICOs in 2017 are now identified as scams. That's not something a developer wants to be affiliated with. And also, Ethereum was also well known for the app CryptoKitties, which, you know, it's fun, but I think the developers have something bigger in mind. I personally think the soundings from this conference are along the right direction. The new upgrades coming along online later this year will empower these developers to build the Web 3.0 that has been promised. We need to put all of this into perspective. This technology is still a little baby. Yes, we have amazing talent and capital is being pumped into the space at a record pace. But we still need to allow for some cooking time. Rome wasn't built in a day after all, was it? As the saying goes. Now, what's going on with the crypto world and financial institutes in the conventional markets? Well, according to this article and Bloomberg, there was a meeting, a closed-door meeting, in which members of the Nasdaq company headed up a meeting between key players in the crypto space. This included the Winklevoss twins, because as you know, they are the founders of the Gemini exchange based in New York. It's not known whether the CEO of the Nasdaq company, Adina Friedman, also attended this meeting. However, she has stated in the past that Nasdaq could be a platform for trading cryptocurrencies when the market becomes more regulated and more mature. So this is really positive news coming from Nasdaq. It shows that they are very open to new technologies. After all, they are a technology company. They're not really a trading company. They facilitate the transactions with, you know, for countries all over the world. Stock trades, for example. Is this a potential M&A in the future? Well, we're going to have to watch this space. It's really exciting, and I personally foresee current players in the conventional financial markets to start buying up crypto companies because they are highly profitable companies, and conventional banks are in a bit of a slump due to regulation and also diminishing returns. Don't worry guys, I'll be reporting on any movement on this front as soon as it comes through to me. But for now, that's it for me. If you like this episode, hit the like button and be sure to subscribe. Also, sign up for all those alerts so that as soon as I upload a new video, you'll be alerted on your mobile phone or your browser. I'm going to be dropping a lot more content that will impact your trading and investing decisions. Also, let me know what you thought of this episode in the comment section below. I work for you after all, so if you want me to cover something in particular, just let me know. For now, have a fantastic day ahead. And it's me, Chris, signing off for today. Bye bye.